Top three things to consider before you make your investment decisions. This is a staple for our show. We always like to bring three things that I want individual investors to focus on before you decide what investments to add to your portfolio. As you can see here, our top three list. First one, don't panic and make trades out of fear. I did receive a number of calls and even some emails asking whether certain individual investors should go to cash, should sell their portfolios out, what the cost would be, etc. I had to answer a few of those questions recently. Some people watching today might think, well, that's kind of silly, but it's not, right? People are fearful. We've seen a lot of gains in the last few years, and many individual investors don't want to see that lost. So, you don't want to panic at this point in time. Second point, many stocks are on sale. So kind of taking the approach from the other side, you don't want to panic, but you may want to look for bargains. There are a lot of things on sale in different sectors of the markets in the US and Canada. And so maybe it's a good time to look at those bargain prices on some stocks. And last, February jobs numbers. We don't hear a lot about the jobs numbers coming out on Friday. Today's Wednesday, only 2 days from now. Things were, I guess, I'll use the word normal, meaning there was no talk about tariffs. We'd probably all be focused on the jobs data because it's important. We want to see if inflation continues to tick higher in the US. We've seen it moving from closing in on 2% to 2.5%. CPI in the US now above 3%. We want to see how we're faring with respect to jobs in our country. We've seen good jobs numbers. But as I said, the jobs is a good indicator about inflation and how the path of inflation is going. So let's talk about the first point. Don't panic and make trades out of fear. One of the reasons why I always tell people not to panic, and you never know what the market brings, is for the first set of charts I'm going to show you. And S&P 500, our first chart here, if you take a chart of the S&P, now this is pretty much a one-day chart. You could see how much the market sold off and then rebounded towards the end of yesterday. So anybody who sold off on the fear, you quickly saw the S&P rebound. It went flat for the day and ended the day slightly down. Today we woke up, S&P futures were higher. And even today, the S&P market has been, or the index has been flirting with positive and negative territory. So it's not a completely washout for the S&P 500. And so if you're selling because of fear, well, you might get burned. You might see a bit of a whiplash effect. Markets go down. Some things are spoken about. New headlines are made, and the market reacts to the positive side. NASDAQ, which is our second chart, again, showing a daily chart. You can see on the far right-hand side, the NASDAQ actually went positive yesterday. I saw it at one point up 180 points on a day where the NASDAQ started off down 300 points. So again, doing something out of fear, doing something that, just because you're nervous and maybe you're hearing from friends or others that are bailing on this market, not a good idea. When you sell stocks based on fear, you want to make your investment decisions based on fundamentals, or if you're a technical analyst, you want to look at the charts and technical analysis side of things. But you never want to do things because it just gets a little bit fearful or you're concerned about the way things are looking. Another example of the fear is NVIDIA. We saw NVIDIA yesterday, and this again, a daily chart on NVIDIA. Look at the ups and downs in one day. Wow, unbelievable. If you look at what happened just before 4 o'clock, the NVIDIA stock fell. Prior to 3 o'clock, we saw it on an upward swing. Really, I was on an upward swing all the way from 10 a.m. or just after 10 a.m. all the way to maybe 3:30 p.m. And then I guess people took a little bit of profit. But then after market, after 4 p.m., we saw NVIDIA stock move higher again. And this morning, stock was down a little bit before we came on air. Not sure where it's trading at this moment. But once again, if you sold off on the initial decline in NVIDIA, you probably would be angry at yourself because the stock rebounded significantly throughout most of the course of the day and then tailed off again. So doing things on fear, selling NVIDIA, selling tech stocks, selling any investment idea is never a good idea. Some people put stop losses. So when the stock comes down, it sells when it reaches a certain price. That too can be risky because sometimes stocks fall and then go right back up. And so if you have a stop loss at a certain price, and the stock were to fall, it hits that price, it triggers, and then you watch as your stock goes right back up again, and I'm sure you wouldn't be too happy. So you want to, as I said, do things based on fundamentals, not necessarily based on anything else. Fundamentals, technicals, that's what you want to look at. Many stocks on sale. That's our second point that I wanted to harp on. And today, because there are many stocks on sale, our first chart has again the S&P 500 index, and I wanted to show how the index is performing because the index as a whole, I believe, is on sale. Yes, certain sectors of the market are on sale more than others. What goes up strong, unfortunately, can and usually goes down strong. So a lot of the bargains we're going to talk about on our show today are in the tech space. Tech moved higher for so long, so quickly, and we've seen multiples, valuations really get stretched. So when things started to get a little bit dicey with respect to tariffs, what do we see sell off? Well, we see some of the tech names, some of the biggest tech names out there today, they started to fall. The first tech name I have a chart of is Broadcom. Remember, Broadcom, chip maker. They make custom chips, among other things. And here you have Broadcom. Look how far Broadcom has fallen. Unbelievable. I actually have the stat here, down 24% when I looked at it this morning from its all-time high. Broadcom, a fantastic name, trading much cheaper than it was just a few weeks ago. Another name, not in the tech space, Bank of America. We saw Bank of America and many of the banks in the US fall when tariffs were announced. Obviously, tariffs can and usually cause a slowdown in the economy because it's a tax on buying. It's a tax on goods. And so that ends up being reflected by the banks, right? The banks are the best indicator on how an economy is doing. And if economy starts to slow down because of, in this case, tariffs, well, that will affect the major banks. And Bank of America down about 12.5% since its recent 52-week high. So in the last few weeks, Bank of America has gone from about $48 to just over $42. And you can see that from the chart. AMD. Now, AMD is interesting. They are a U.S. chip maker. They are the second biggest rival to NVIDIA. And AMD has been falling, not just recently, but for quite some time. Their results just seem to not be able to get the stock over the hump. And you can see how much this chart shows you the fall. At one point, they were a $227 stock. Today, before I came on air, stock was trading just under $100, a 56% decline from the highs. Yes, 56% for a fantastic company with fantastic management, fantastic CEO. Is that an opportunity to buy? Well, I guess it'll depend on you, the investor, and what your goals are and risk tolerance is. Our next chart here, Amazon, another stock that we've talked about many times. Amazon is on sale as well. Look at that chart falling off a pretty steep cliff on the end there on the right-hand side. Amazon down 15% from its recent high. And I believe our last chart, last but not least, is Google, Alphabet. Alphabet also is or has fallen significantly, down about 18% from its recent high. And the thing about Alphabet or Google is it is actually the cheapest Mag 7 name. It is the cheapest of the big tech stocks, trading at only 18, 19 times forward earnings. So there are definitely things on sale. We talked about a lot of the tech names that are on sale, one bank stock, other names that you might want to take a look at depending on your risk level and investment objectives. Other names, Caterpillar down quite a bit. They're the big machinery company. United Rentals, they rent large machinery as well. These names down significantly. You know, even if you look on the Canadian side, Celestica, a Canadian tech name tied to artificial intelligence, down from about over $200 a share down to about $130 a share. So overall, this to me gives us opportunity. So I know a lot of people are fearful about what's been going on, but when there's fear, we all know there's opportunity. And we always want to buy low and sell high. Perhaps now's the time to do it. Our third point that I want investors to look at or consider before you make your investment decisions is or are the jobs data at the end of the week. And we're going to get US jobs, Canadian jobs, and simply put, Jobs are starting to, I guess, fall a little bit. Last month was down from December. January numbers were lower than December. We have a chart on U.S. jobs growth. You'll see it here that the last month, 143,000 jobs gained, was actually lower than the prior 2 months. We don't really want to look at October because there were a lot of storms that affected things. But if you want to look at it going back to even September, that number was lower. So if you strip out October, it was the lowest number we've seen in the last 5 months, but stripping out October, the last 4 months. Canadian jobs, I think, are actually looking a little bit better than US jobs. And we have a chart on that. Canadian jobs, 76,000 jobs created in January. We'll see what they say for February. Pretty solid, 91,000 in December. Jobs is a very important number because jobs gives us an indication as to, amount of people employed, amount of people looking for work, JOLTS numbers, job openings. We want to know that as well. And that all comes into play when we start to figure out what the inflation situation or story looks like. And that's what the Bank of Canada and the Fed will be looking at. So along with not panicking, looking for bargains, you want to keep an eye on the macro. You want to keep an eye on jobs and what is reported on Friday morning when they report, usually around 8:30.